Hello everybody and welcome back to another video. So in this video I want to talk to you guys a little bit just about channels, okay, and how channels can represent the movements in price, okay, whether we're being impulsive or corrective. We now understand the concept of impulses in the market and then those retracement corrective periods followed by further impulsive moves in the market. But if we take that one step further and we use not only our trend lines, okay, but also actual channels in the market, what we can actually understand is when price begins to actually slow down before potentially reversing, okay, and when price does slow down, we will actually be able to see those breakouts of particular trend lines and channels, okay, and it will give us early indication that the market may be changing direction, and then it will allow us to actually get involved in a trade. So when I talk about channels, okay, what do I actually mean by this? So if I was to draw how channels can actually represent the movements in price, what I would actually be showing is how we have, so say for example an impulse up, and then we have some kind of correction, okay, so we pull back, another strong impulse up, okay, and then say we have another corrective move back. Now when I talk about a channel, I can talk about channels in two ways, either ascending channels or I can talk about descending channels. Now an ascending channel, you may be thinking to yourself, okay, well if it's an ascending channel then surely we're still pushing up, we're pulling back, we're pushing up, we're pulling back. But what I'm talking about in terms of an ascending channel is actually diving a little bit deeper into how these moves up and moves down are actually being shown to us with each candlestick that's actually presented on the chart. So obviously, you know, in an impulsive move to the upside in a nice bullish trend, what you'll be seeing, okay, is nice large impulsive candles up, okay. These candles normally have little to no wicks, okay. They're nice strong bodied up candles, okay. And in a more of a corrective period, what you'll see is you'll tend to see more wicky candles, okay, so smaller bodies and larger wicks, and this will indicate a pullback. So if I just have a little quick look on the chart, okay, and show you guys what I mean by this. So for example, this candle here, okay, can be seen as a nice impulsive up candle, okay. You can see how it has little to no wicks, okay, and it's a nice strong body up candle here. Now this is exactly the same thing, but just a bearish version, okay. It's a nice strong body down, okay, lots of momentum, okay, and little to no wicks on either side. Now if I was to show you more of a corrective period of price, okay, I would look at something like this in here, okay. Now you can say that the price action in here, okay, is nothing like this candle here. Now if we were to look at these candles in here, they're very small bodies, okay, some of them hardly any body at all, okay. Much larger wicks compared to the body, so the ratio of wick to body, okay, is much greater, and that would indicate to us that these are much more corrective candles. So although we understand that the general concept of the market is to move in these impulses and corrections, okay, what we can actually look at is how are these new impulses and corrections actually being portrayed in the market, okay. And just because price, you know, is taking out a high in here, okay, and creating a new high before a pullback, is that actually showing to us momentum in the market? And is this next impulsive leg actually an impulse? Because when I talk about ascending channels, what I mean is that what can actually happen is we can have a push up, okay, a pullback, and a nice impulse, okay. So at this point in time we've had two nice strong impulsive legs, okay, in here and in here. Now let's say for example the market's looking like it wants to turn. So what it will do is it will represent this in candlesticks, because you'll start to see a reduce in the amount of momentum there is in the market, okay. So there'll be a reduction in momentum, and you'll be able to see that by basically looking at each leg. And what you'll see in the candles is we'll start to have, you know, a move down, okay, and then the break up won't be very impulsive. It might just break a little bit, and then what it will do is it will retrace again, and then it will break higher, but again it might not be very impulsive. It might break back down straight away, Okay, it might take a while to actually break the high again, and then it breaks up again, and then it pulls back. Okay, and then it breaks up again, straight away retraces back. Okay, and now if you look at what we've got here is, yes, we're still technically in that bullish trend to the upside because we've had these impulses, these corrections, these impulses. Okay, and we're still technically, we know we're breaking higher still, but if we actually look at the nature of how the candlesticks are actually being displayed, you can see there's a definite difference in, these legs of price, okay, as opposed to these legs of price, and that's just how the candlesticks are being portrayed. Okay, so what this indicates is a potential ascending channel, okay, because what it's indicating to us is that we may be seeing some kind of potential reversal. Now, why would this represent some kind of reversal? Because, like we just explained, when price wants to change direction, it tends to slow down. Okay, you tend to get a reduction in that momentum. Okay, and that will be indicated to us in this kind of format. So if you go about the markets, okay, and you see this kind of structure, how we have an ascending market after a nice impulsive move to the upside. Okay, a lot of the times, okay, what will happen is you'll see price begin to break back lower. Okay, and if we actually draw this on, what you'll see is we'll break out of this trend line. Okay, and then we'll actually start to impulse to the downside. So what this ascending channel has actually shown us is it's a form of trend line because you can technically mark all these low points in here, and it gives us a nice breakout of this trend in here. Now there may have been a larger trend line, okay, at one point in time where we may have had something like this on the chart, okay, and then what this has done now is it's given us a more of a tighter refined trend line within a larger bullish trend line. Okay, but to us, if we're able to identify, okay, well, now I'm seeing price, it's losing momentum. Okay, there's way more wicks on the charts now. Okay, the bodies are shrinking. We're starting to ascend. Okay, so we're still trying to break up, but every time we break up, all we're seeing, okay, are these moves lower. Okay, then this would indicate to me that price is probably going to end up reversing. Okay, and this can happen in both directions. Okay, this is obviously an ascending version, but we also get descending channels as well. Okay, so it's just about looking at how price is actually represented. Everything's based on this same concept of impulse correction, and then it will obviously change direction, and then it could change back the other direction. But it's trying to find the little clues, okay, and the breadcrumbs that are left behind to indicate to us what might actually be happening before a potential move, so that we can then actually capitalize on that leg in either direction. So another thing to take into account, okay, guys, is when you get these kinds of impulses and corrections, okay, and then followed by an ascending channel, what we also tend to see is a sweep above previous major swing points in the market. Now, say for example, we have price, okay, that's been pushing down like this, okay, impulse correction like this, okay, and then we see a change in trend, so we get a break here, it pulls back, it breaks up, it pulls back, okay. Now, the first thing that I'd be looking at this point in time, okay, is this area in here. Now, this area in here, okay, would represent a nice swing point in the market, and what price tends to do before it reverses is it will come up above here, okay, and it will sweep anybody who had stop losses left behind in this area. Now, this concept, okay, is known as liquidity. And what it means is that there's highly likely, okay, to be lots of orders resting in here, which may end up pushing price back down, okay, in the opposite direction. So this is why we want to make sure that when we are looking for our ascending channels, okay, we want to try and pair it up with some kind of major swing point, okay, because it adds more confluence to our trade idea that if we're going to be having an ascending channel, we're also sweeping above these high points in here, okay, and that will give us even more reason that price may drop to the downside. So say for example we end up approaching this high point in here, what we could then be doing, okay, is start to look for our ascending nature, okay, which remember is slightly different to our impulse correction impulse because it shows still an impulse correction and impulse, but it will be much tighter and much less momentum. So after this pullback here, okay, we may see a push up, a pullback now, okay, which may be a little bit not as deep, maybe a little bit shallower, and then we may break above this high. we then may retrace straight away, we then may pull up again, retrace, pull up, retrace. And that's the main thing you want to notice, okay guys, is how every time it breaks above, what you'll notice is it will tend to retrace straight away. Whereas if we're in a more impulsive leg like this, you won't necessarily see that retrace straight away, but you may see more of an impulse first, and then, you know, a much slower pullback, you know, a deeper correction before another strong impulsive move. Whereas when you get an ascending channel like this, what you'll tend to see is that price will snap back in, okay? It will retrace, it will break out, retrace, break out, retrace. So it's telling us that it's struggling to break any higher, okay? The momentum tends to be running out at this point in time, okay? And when we tie that in with this area of liquidity, okay, which is this swing point as well, what it gives us is a nice ascending channel in here. And then what we will be expecting, okay, is price to actually break this level in here. And then what we can do is look to get involved either straight away from the breakout of this channel, or we can look for some kind of support and resistance, okay, or some kind of retest after we actually break out of here, okay, and we can look to get involved in the first correction before potentially the next run down, which is where we will actually end up capitalizing. So let's have a little look on the markets now, okay, and we'll try and find some real life examples of this situation where we're seeing ascending and descending channels sweeping above certain swing points in the market. And then we can have a little look at how it actually reacts when this happens and the types of candles that we actually get presented to us, so we can actually work out the difference between these impulsive moves and these more ascending channel moves. So let's have a little look at that now. Okay, so here on the chart, okay, I've got the daily time frame. Now, what I'm going to do is I'm just going to explain how this concept of ascending and descending channels can actually be represented on the charts. Now, if we just look overall at how price has been presented, you can see that we've been very, very, very bearish, okay, for, I mean, the whole of 2021 and even the majority of 2022, okay? This is euro dollar. So you can see that we've been in this massive bear trend, okay, where we've been constantly breaking lower. So throughout this entire bear trend, okay, there wouldn't have been many areas on this particular time frame where you'll actually see ascending and descending channels and then a reversal, simply because there hasn't actually been that many major changes in trend. Obviously there's been smaller pullbacks, okay, smaller corrections, and there will definitely be some examples of it, but overall you can see that we've had this massive move to the downside followed by this push up here. Okay, and now we're just starting a potential pullback or a potential impulse further to the downside. So if I start at the top of this up leg, okay, we can just talk about what actually happened at this area of price. Now, if we were to look at this area of price, okay, which is pretty much where this move to the downside actually started, what would we actually be able to identify, okay, if we were to look at how the price was actually presented? So the first thing that I notice, okay, is if I'm looking for ascending channels, is I notice this area of price action in here, and I notice this area of price action in here. Now, these two areas of price action can be seen as fairly ascending, okay, very sort of symmetrical, okay, in nature, and they're very similar, okay. You can see how this channel in here, okay, has these points connected in here, okay, and it's got the bottom points running in here, okay. And you can see that both the top and the bottom lines, okay, are running parallel to each other, okay. So you can see that it's a nice, clean, ascending channel. Now, if we look at the price action over here, okay, it's not quite as clean as this channel in here. However, you can still see that we're definitely ascending in nature. And what you can do, okay, is we can still connect these points up in here and these points in here, okay, and you can definitely see that we've still got that kind of channel element in here, okay, with these highs and these lows. Now, when I talk about channels, okay, another important point is that a lot of the time they tend to have at least 3 touches. So if I'm looking at my channels, okay, a lot of the times you'll definitely see that price will push up, it will pull back, it will push up, it will pull back, it will push up, and at a minimum, okay, it will create these 3 high points in here before potentially breaking out. Now this will allow us, okay, to join, you know, a trend line potentially along the tops in here, okay, and you may see a couple of lines along the bottom like this, and this would be, you know, an ideal situation where you'll then see a breakout, and that'll be it. You've had this 1, 2, 3 touch in here, and then it breaks down before potentially pulling back and then breaking lower. Now we understand that, you know, we can actually have these 3 touches, okay. This is why I said this example in here, okay, is quite a clean example, because it does have that 1, 2, 3 touch ascending nature, okay, before a break lower. So the only thing that would have actually improved this trade is if we actually swept some kind of liquidity, okay, which we know is some kind of swing point. Now in this example, okay, the closest swing point would have been this high in here, and you can see that we don't quite reach that high point in here before actually breaking down. Now, to me, if I was looking at something in here, that would be slightly concerning, the fact that we didn't sweep above this high point. So it would indicate to me that we may not be completely ready to actually break down to the downside completely, and what we may do is actually consolidate around a little bit more and create another potential swing point to actually sweep above before then moving lower. So what you can see that actually happened is, after we had this little 3 touch pattern in here, we began to push down, okay, and we started a small sort of impulse, correction, impulse, correction, impulse in here. Okay, we then began to push back to the upside, and now what we've done is we've created a few more potential swing points which we can sweep above. Primarily this swing point in here, okay, and you can see that that's actually what happened when we came up, okay, and we broke above this larger swing in here. So as price approached this area in here, okay, I would be asking myself the question, well, where is either the ascending nature, okay, and these small bodies, large wicks, where are they, how are they being presented, okay, and is this showing me a good sign that we may actually be moving to the downside? And of course, once you can actually tie in this high point in here with this kind of ascending nature in here, like we just put in, okay, showing these clear points in here, I mean, you can make it a little bit steeper and join these lows in here, okay, but if you are to do that, then you can see that we have this clear reaction and then an impulse to the downside. So you can clearly see that, you know, this impulse in here, you know, combined with these down candles, it's much different to this price action in here. If we really zoom in, you know, and we have a look at every single up and down candle, what you can see is the exact point that I explained before of how price actually breaks each high and each low. So if I was just to draw in these high points in here, okay, we just mark in these areas in here, and we just take this off for the moment, what you can actually see is how every time that it breaks above the previous high point, we immediately retraced back in. We then broke up again, and the next candle immediately retraced back in. It tries to break up and immediately retrace back in. It breaks up and immediately retrace back in. Okay, and then it fails to break higher before then even moving lower. So just by looking at this, okay, you can see that ascending nature that we have in here. The way that the momentum in the market has actually completely dropped out. And now we're seeing this much more corrective phase. But the only difference is the correction is actually in the opposite direction. Normally, we'd be looking for this kind of price action in an impulse correction to the upside, okay, but in the other direction. So what we would normally see is a nice strong impulsive leg, okay, and then we would see this price action, but coming down. So we would see, you know, these tighter moves like this, okay, and that would be part of our correction, and then we would see that next breakout to the upside. So this is how it normally plays out to indicate to us that we're still moving up, okay? And we identify this area as consolidation, you know, and as a pullback, because we're seeing that there's a lack of momentum here to the downside, okay? There's a lack of momentum to the downside, and then what happens is price eventually pushes up and continues that impulse to the upside. So for us to be in an uptrend, but now be looking for this same nature, but in the opposite way. We're now looking for it in an ascending way. Okay, this is how we can actually go about identifying a potential reversal from a bullish leg. So then you can see, okay, now we've had this happen, okay, we then created that swing point in here, okay, we broke above here, and then we started the move to the downside. So these were the clear areas, okay, where you can see that price actually began to stall, okay, and you can see how they left the little breadcrumbs in there by having that ascending nature. And if you were able to understand that, okay, well, we're breaking above this high point, I'm seeing clear up candles, down candles, up candles, down candles, you know, very snapback retraces, you know, lots of wicks. It begins to build that picture that, you know, maybe we are moving to the downside. And then once you get those breakouts and those more impulsive bearish candles, you now know that, okay, maybe my idea was correct, and then you can actually capitalize on it. So after this, okay, we then see price push all the way down. Okay, it's very, very, very impulsive. Okay, it spends a whole year, pretty much year and a half, just moving down. Okay, we begin to pull back up. Now in this situation, okay, we didn't necessarily create the same kind of thing. Okay, we didn't create that major kind of tight descending channel before pushing back up. Okay, I mean, you can see that we do have these 3 touches in here. Okay, remember, it's never always going to be exact, but you can see how we have this 1, 2, 3 in here before we then break higher. Okay, so you could see that on a larger, you know, larger picture, we are kind of beginning to descend, but at the same time, all of these impulsive legs still have, you know, very nice impulsive candles. So it wasn't necessarily you know, definite the price was going to actually reverse here. Okay, there was only a couple of clues that price may have done so. Now another way of being able to work out if price is going to reverse here is if we actually swept underneath a major swing point. So if we have a little look out here, okay, you can see that, you know, we haven't been this low in price, okay, almost ever, okay, as far as this chart goes. But what you can see is that we did sweep underneath all of these lows in here. So we knew that it was only a matter of time until price was going to eventually either pull back or at least reverse for a little while, because we cleared out all of these low points in here, okay, and then as well as breaking underneath all these low points in here, okay, so if I just mark up this extreme in here, okay, pop this on there, you can then see now, if I show you these 3 touches that we had, you can see that we had a 1, 2, 3 touch pattern breaking underneath this liquidity. So now it actually makes a little bit more sense, and you can see that the last 3 touches were underneath here, okay, and that then caused this push to the upside. So if I then had my top line on as well, okay, you can then see that price eventually breaks out in here, okay, before retracing, and that is where we would then look to get involved, okay, in this first corrective pullback in here. Okay, looking potentially to trade something out of these wicks in here, okay, and then this would be where we want to get involved to potentially trade higher.
The best time to take action is now. What are you waiting for? Tired of struggling with market direction? Want buy and sell indications at a click of a button? Who wouldn't? Check out TradeDork's buy and sell indicator today at TradeDork.com.
So there's always the same kind of understanding, okay, wherever we are in the market. There's always that sort of element of impulse, correction, impulse, ascending nature, descending nature, sweeps underneath these swing points, okay? And it's how you can actually read that and then utilize it to our advantage to actually get involved in trades. So if I then look at the end of this leg up here, okay, what you can see is we've now slowly just began to sell off again, okay, just in here. Now, if I have a look at this, what can we actually see? So if I just clear up the chart, okay, now again, what have we actually got before this move to the downside? And you can see we had this very similar ascending nature, okay, we had this touches in here, okay, running along the bottoms as well, and it creates this ascending nature in price, okay, before this move to the downside. Now again, where is the nearest high point, okay, which is likely to be swept? And you can see that it's just this swing point in here. Now, if I was looking to trade this, okay, I would be very unsure of whether this is going to be moving to the downside or not if it didn't take out this swing point. Now, if price had just literally stopped here, okay, and it never took the high out, I'd be very cautious and I'd want to see, you know, more confirmation to tell me that the price is actually moving to the downside, because we know the price likes to sweep above these points, okay, grab the liquidity and then move lower. So by understanding that, okay, it was very likely that price was going to grab that liquidity before retracing, okay, and this is a clear pattern that we can see in the market. Now, in this situation, okay, you can see, well, why do we have this large impulsive up candle here, and why would that mean that we're actually going to be moving to the downside? And this is a very common thing that you can see, how you can go from this very corrective price action in here, where you can see we have all of these wicks just in here, and these lots of up candles, down candles, up candles, down candles, lots of, you know, impulses and retraces, okay, very, very slow momentum, and then suddenly we get this sharp push up and then a sharp retrace back in. And this is pretty much a way that they like to grab liquidity, okay, above areas like this, and it's very common in a situation where it didn't grab that liquidity before. Okay, price will punch up like this, but don't be fooled, okay, don't presume that we're going to be continuing to the upside, okay, understand that we've had this corrective nature, okay, and now we're going to be testing above this area in here. And watch, okay, see if it snaps back in. And what does it do? Immediately, okay, large impulsive up candle followed by 2 large or even 3 large impulsive down candles. Now, if we had a nice strong up candle in here, okay, and then it was followed by very small, you know, slow down candles, okay, then maybe we are continuing that trade to the upside, okay, maybe we are going to hold above this level in here. However, because of that snapback reaction where we had this impulsive up, impulsive down, okay, it told me that we've actually grabbing liquidity, we've come in from an ascending market, okay, and now we're breaking down, and that is when you then want to be looking for those continuations to actually trade short. So now that we actually have an understanding of how this can work on the daily time frame, what I'll do, okay, is I'll go down to a slightly lower time frame now, and we'll look at some more examples of how the daily ascending and descending channels, okay, can actually work with the lower ones, and how you can have, you know, say 4-hour or even 1-hour ascending channels within a much larger daily ascending channel. So let's have a little look at that now. Okay, so now that I'm on the 4-hour time frame, I'm just going to go through a few more examples just to explain the different situations that can actually happen, okay, and the different ways in which we can get these ascending and descending channels and how they can actually be displayed to us. So if I'm just going to look at this whole leg in here, okay, I'm just going to talk through each kind of phase of price action, okay, and the types of impulsive and corrective movements that we have, and also the types of candles that we actually see on the screen, okay, at each different phase of the market. So if we start down at the bottom here, okay, you can see that price, first of all, okay, it starts by sort of impulsing up here, okay, we pull back in here, and then we have a nice another impulse just in here. Now after this, okay, you see that we have this kind of slower corrective price action in here, but in this situation price actually impulsed again to the upside. So the one reason that you can see that, you know, price may not have needed to actually reverse here is the fact that we did have 1, 2, and the third touch, okay, we didn't actually see that reaction to that third touch at the top, and instead price actually just continued to break higher. After that, we then saw that we had this impulsive leg up here, okay, followed by this sort of correction in here, and then another impulse up in here. Okay, this was then followed by another impulse in here, and then we then had this kind of correction in here, okay, impulse up, correction, impulse up, okay, and then a break to the downside. Now, when I look at this, okay, on this time frame, it looks very much like we've had an impulse, correction, impulse, correction, impulse. But if I just zoom out slightly, okay, and look at where we actually are in price, what I can see is that we've got this swing high just over here. Now, if I use this swing high, okay, and start to look for a larger ascending channel, what I can see is that, in fact, we've actually got these very clear 3 touches just in here. Okay, you can see we have 0.1, 0.2, and 0.3. Now, if I just connect the bottom lines as well, okay, now it actually makes more sense why we actually had this little impulsive move down in here, because of this ascending nature that we began to create, okay, sweeping above this little point over on here. Now, what actually happened after we broke down? Well, we actually went straight away into a descending channel. So here you can see that we have a descending channel in price in this area in here. Okay, if I just clear the chart up, Now what can we actually see here? You can see that we have 1, 2, again 3 touches. Okay, you can see how every time that we're breaking, okay, we're retracing back in, we're breaking lower, we're retracing back in. Okay, so if we connect these, now you can see that we kind of have these points in here. Okay, you can see that it's more of a quite a steep descending channel. Okay, but what does it cause? It then causes this push to the upside. Now after this descending channel, we have this push up in here. Okay, we then have this nice pullback in here. Okay, so that's quite a deep pullback. Okay, followed then another impulse in here, then another correction, another impulse. Okay, and eventually we start to reverse. Now again, if I was to ask myself, okay, well, why did we start to reverse in this area here? Well, again, if we zoom out, okay, and if we just identify to ourselves key areas of liquidity, you could see that we have this area just above here. Now again, if I was going to mark in this area in here, and I was going to say, okay, well, where is the most obvious 3-touch ascending channel? Okay, now suddenly we actually have this area just in here. Okay, we have 1, 2, 3 points in here. Okay, point 1, point 2, point 3. Okay, if we then connect this up with this in here, okay, it makes this steep channel just in here. Okay, and what it does is it shows how we swept above this high point, okay, and then we started to break lower. Okay, after we actually have that breakout, okay, this is when again you can start seeing more impulsive legs, because now what we're getting is impulse. Okay, correction, impulse, correction. Okay, impulse, and look at the difference between the candles. Okay, now we're getting the big full body, okay, strong candles. Okay, and we're getting those corrective moves in the opposite direction. Okay, so this is a clear impulse. Okay, there's nothing here telling me that we want to reverse just yet. Okay, you can see that we're getting a push down. Okay, and then we get a pullback, and then we start to break lower. Okay, this area of price action, okay, is quite descending, it's quite corrective, and it's probably why we had this then move in here back to the upside. Okay, but all this was doing is it was just breaking above liquidity points resting in here. Okay, and then that then fueled the move even lower. So that's how you can actually go about, using price and actually trying to figure out what phase of the market we're in, and then what are the candles actually showing us. Where is the actual impulses and where are the actual corrections? And if we are in a bullish leg, when is that leg going to fail, okay, and become bearish, and vice versa? And it's just about being aware of that, okay, and just practicing it for yourselves to make sure you really have a good understanding of these key levels, okay, and the key phases of the market that we're actually in. So I hope you guys all enjoyed this video and took something away from it, and I'll catch you all in the next one.
Be a dork.